we would like to invite you to the third panel discussion with our speakers, who will share more on topic Europe and Spain landscape of green energy finance. The moderator this time will be Villar Pérez. He is the financial and market advisor Renewable from Greenward Partners. Welcome, Luis. Is working this microphone?
No. Okay, now.
Now, we can hear you clearly.
Okay, thank you very much.
Thank you.
Well, thank you to the organization. Thank you, all of you, for being here. Can you hear me? Yes.
Yeah.
So now I will call this amazing panel that we have today to talk of green energy finance, and here to the seats. First of all, Eugenio Alvarez from Lightsource VP. Hello, Eugenio. Hello. Then we have Eduardo Martinez Granados from ING. Hello, Eduardo. Then we have Roger Font from Banco Sabadell. Hello, Roger. We have Alvaro Ruiz Urrutia from Mirabaud Group. Thank you, Alvaro. And we have Tomás García from JLL. Thank you, Tomás. Well, we have an amazing panel of top professionals in the finance business of the renewable energy in Spain. So I welcome all of them, and I will let them introduce themselves in the first time they will speak in this panel. So I'm going to try not to be the star of this, because I'm not the star. They are the stars. So I will make a very straightforward questions, and we will be delighted to hear the answers. Most of the questions will be addressed to all of them, so you can all participate. You can all give your insights, although some of them might be more focused on some of you. So I have prepared a few questions. And the few question is, well, we have seen that the market has been evolving during the last years, and we have seen, well, we have seen quite interesting changes from financing projects with feed-in type system under the specific regime system, which was regulated revenue system, to situation in which the market is developing merchant projects. So we have seen an evolution in the market, and we would like to see how this market has evolved even further in the last months or years in this sense. So first question is, what is the new alternative financing structures beyond plain vanilla of non-recourse project finance? What is the new instruments we can find in the market to finance both merchant projects or projects with PPA? So what is the landscape of financing renewable projects now in Spain? This is a very general question. I will start, well, you can start, or I will start by order, so, which is the easiest way. So, Eugenio, I will start with you.
Well, thank you very much, Luis, for the introduction, and thank you, Energy Box, for the invitation. Regarding the specific question that you raised, I would say that as of today, we have a very interesting environment, because the plain vanilla structures that you mentioned are no longer, in many cases, viable, because they need the financing structure to be designed for the different developers and different stakeholders need to be much more flexible, I would say, and adaptive. So in that relation, I would say that having alternative structures that could be modified in the short to medium term or adapted to the continuously changing environment that we have as of today in terms of economics, in terms of political context, everything, they need to be there and to be a viable alternative for the investors.
Thank you, Eugenio. Eduardo, what is your view?
Yes, so I would like to focus on a word that Eugenio said is flexibility. It's true that we have came from a market regulated or under PPA structures that give us leverage to size the debt based on certainty of cash flow. It's true now that developers are asking us for more merchant projects, and in this sense, what we have came, we, the banking industry, not ING, is with a solution whereby we can provide short-term financing based on merchant revenues, low leverage, that give us this flexibility that at the end of the financing, after 3, 4, 5 years, we can sit all of us in the table and see how the market has evolved, how much debt has been paid, what can we do in the next, I don't know, 25 years of remaining useful life of the assets, which I mean can give you some very important cash flows to repay this debt.
Thank you, Eduardo. Roger, what is your opinion?
No, I think that nowadays there are different possibilities. You have, as you mentioned, traditional banking, project finance, long term. You also have project finance, short term, construction, merchant, and with PPA. But you also have all the private debt funds that offer funding in a different way than the banks would do, with its pros and cons. In case of Banco Sabadell, we have the debt capital markets, which also work with funds to provide different structures with its pros and cons, but in order to accommodate also, at least in our case, banks have not financed development, or traditional have not financed development, so there's also financing for development, so it's all kind of possibilities nowadays.
Thank you, Roger. Alvaro, how do you see it?
Yeah, well, linking with what Roger was saying, and not only focusing on the project finance by itself, maybe on the more alternative side, we're currently seeing more and more fast evolving structures from certain debt funds, which, well, may be worthy to be analyzed, especially for those developers, both domestic, international, listed or non-listed, which basically are our main client base at Mirabaud. Some of the current question now for them is, okay, I did IPO last year, or I was in the road of IPOing, I need a substitution for equity. And this is where I think these kind of solutions are perfectly fit at the current moments of the market, because, of course, no one wants to be extremely diluted as of today. If you are a listed potential IPP, even small or mid-sized, you would not look at the current capital markets, in the equity side, for not extreme dilution. Unfortunately, life has changed in the last 4 to 5 months, also for the bond market. So many sponsors uncertain in which should be the exact pricing for those alternatives. So they're not interested at the moment. They prefer to be in the status quo. So I believe there's some room for this kind of sorry, I don't know, is this working? Yeah. There's some room for this kind of alternative debt funds, which I believe that they bring to certain developers or certain vertically integrated companies aiming to go to the IPP structure going forward, because they bring, first of all, doability or feasibility of the transaction, and they bring value creation. And value creation in these cases It's more a value preservation, I believe, rather than how much of my value creation should I share with the lender or with the let's say co-sponsor. And in these cases, we are actually looking at very imaginative new structures, which kinds of performance fees, which just add some basic points of IRR to what lenders would ask, but would specifically make possible that developers with greenfield portfolios, obviously not 100% under development, but with some part in construction or even under operation with some megawatts, would take the tail of 5 years and understand which is the current valuation nowadays compared to the, let's say, existing potential valuation in 5-6 years, which should be the financing period for these alternative lenders. And so there is this specific gap, which is the value creation, and by which most of that part will go to the sponsor. So that makes these alternatives especially attractive these days, right? Where capital markets are closed or, even closed, yeah.
Very interesting, Alvaro. Thank you very much. Tomás, what is your view on alternative financing instruments?
Thank you, Luis.
You have to get closer to
Yeah, this may be working. Yeah, thank you, Luis, and thank you very much to Energy Box for having JLL in this panel. Yeah, capital markets, it's a pretty complex world. So let me try to perhaps simplify and distill some learnings that we are seeing in the market. As financial advisors, we are in contact with many of these players and stakeholders. So I think we're in a good position to provide some insights. So first of all, Luis, to your question, again, simplifying the world a lot, I would say make two categories of financiers. On one hand, you have the traditional banks providing non-recourse project finance, which has been the norm so far. But nowadays, we are seeing how a bunch of alternative sources of financing are coming to the market, especially for merchant projects. And in fact, just before the summer, so about 3 months ago, we published a paper in our website that you can download. It's for free and it describes all of these products. But anyway, so the project finance has essentially two advantages, long-term and cheaper cost of capital. But one big disadvantage, which is the treatment of the merchant revenues is not so good. It's perhaps a little more stringent, and maybe Ruiz can correct me here. But so that leaves us some space for these new entrants, new players providing new products, financing products that provide better treatment for merchant cash flow. So they're happier to take, quote unquote, happier to take merchant risk. And that in turn translates into higher gearing ratios. And so leverage can go up to 80, 85, 90% in some cases, which is something very important for many sponsors. And that also, they give flexibility. So there are many types of products, and depending on the need of the sponsor, depending on the project, you can probably find the product that you're looking for to finance whatever you need. The disadvantage, of course, is that much higher cost of capital. So we're talking 6%, 8%, even double digits in some cases, and typically shorter term. So yeah, there is good and bad in all of these things, but I think the good news is that now let's say the spectrum of solutions available to sponsors to finance their projects is a lot broader than it used to be, say, 12, 18 months ago.
Thank you, Tomás. This is very interesting. And it's very interesting because you have spoiled my next two questions.
Sorry.
You have already answered them, but still I will do it. I will do them. I will synthesize in just one question. And I would like to know the opinion of all of you, and especially both from capital, or from lending resources providers, and also from investors. As Tomás said, one of the changes we've seen in the market in the last time, in the last months or years, well, I would say in the last maybe 1.5 years, is that there is new entrants in the market offering new products, and also there's a growing appetite for merchant projects, or at least this is what they say. I would like to hear your opinion on this. And is really a higher appetite on merchant risk, first of all, and how you see these new entrants? How do you see this new competition to Spanish commercial banks in the Spanish field? I will change now the order. I will start with Ruiz. Yeah.
I think that obviously it's quite clear that from a traditional banks, the merchant financing it has been a scarce. However, in the last few months it has changed a little bit because, well, in our case we finance merchants since back 2018, but there has been new entrants from the traditional banks in what you were mentioning. Exactly, what you were mentioning in a shorter term financing. But in most of the cases, well, not in most, in some cases it works. If you have, it depends on the sponsor and the strategy of the sponsor. If you may have a traditional sponsor which traditionally would contract a PPA, but they just want to wait, and then for that sponsor that they know that they are going to get a PPA and refinance it at a higher percentage of leverage, a shorter term construction financing, it works. And now there are banks that can offer that. If you are talking to long term, it's a whole different game. It's us and few other banks. Then, in terms of merchant financing from the funds, in our experience and talking to the debt capital markets in our team, which work with them, I think that there's appetite, and the structures are different from what Forja myself would do as a bank. Maybe the green is a little bit higher, but at the same time, maybe the cost is a little bit higher, but maybe they have some restrictions that the banks are less restrictive in some important issues. So I would say it's complementary. So at the end of the day, there's a lot of projects that are going to go, that want to go merchant, and there's solution for those.
Okay, thank you, Roger. I would like to hear the opinion of the other financing provider we have sitting here from ING, Eduardo.
Honestly, I mean, not too much to add from what Roger has already said. I think what we have experienced is that we are still receiving a lot of RFPs from different players. So I think that traditional banks, we still have, I mean, something to say and an interesting product to sell to our clients. This specific construction bridge financing, I think, has raised a lot of interest in the last few months, where we provide debt to build a new facility or a portfolio with low leverage at quite interesting pricing, and for a short term, after which we will refinance, see if the client is going to maybe close a PPA with which we can resize the debt. We can, of course, increase our leverage and set up a calendar that can be fixed or maybe feasible with a kind of debt target balance kind of features that will make the debt to be fully paid from our competitors from the debt capital markets. It's true that they are increasing their interest in this kind of projects, in renewable projects, and we see that some developers, maybe not large portfolios, but maybe a smaller scale projects are financed with them.
Thank you, Eduardo. Let's hear the voice of the industry, Eugenio. Are Are you trying? Are you willing to finance merchant projects, and are you looking to alternative players in the market for this type of structures?
Indeed. I mean, we obviously need, as I said, a structure that fits the current situation that we are facing as of today. And in that situation, what we are asking for the lenders is to be more comprehensive and be more have a deeper knowledge on the business itself. So in order to do so, we need to involve them not as a debt provider in the traditional sense, as more, as Alvaro was mentioning, as a partner, that we share the benefits of the good performance, or we share the problems when there's a bad performance. So this is something that obviously some traditional banks are adapting and are managing to see how they can extract value from that. But at the same time, there are new players, newcomers that are providing these kind of new structures. So this is something really, really relevant for us, because I mean, there's obvious, I would say, for most of the audience here, that current situation is very beneficial for trying to take advantage of the current high level of prices in merchant terms. So this is something that we need to be aligned with the different lenders.
Okay, thank you, Eugenio. Now let's move back to the financial side of the table. Alvaro, what is your view on this subject?
Well, don't know if there's much room to add, but basically the short answers would be, of course, increasing appetite from lenders to go for merchant structures. But the tricky thing still today is merchant goes with a lower sizing, and that's key. So whenever a sponsor can work with a lower sizing, then merchant financing should be beneficial for them. If what they're looking for are well, leverages of 70%, 75%, I personally didn't see any merchant financing at those levels as of today. And I don't know if that's something that will come or not, maybe. Yeah.
Agreed. No, totally agreed. I mean, if you as a sponsor can afford to only leverage 60, 65, maybe 70, project finance, non-recourse is probably going to be your best solution, definitely the cheapest. But if you're a sponsor that cannot afford that and you need to go higher than that because you don't have enough equity, there is other solutions available, which I think is good for the industry. Now, the other thing I would add is, of course, most of these financing solutions, and I said most because some of them work under a fixed coupon, are based on basically a spread over a fixed rate, a rate. And this rate has been increasing very dramatically, as you guys know, because of the rise of interest rates. So essentially, the cost of debt has gone on the rise very significantly over the last 12 months or so. However, I think the key highlight here is that the spreads, at least what we have seen, the spreads have not really changed so much. So yeah, banks, traditional banks, are funding themselves more expensively, but they're not applying a higher risk premium on their spreads, which to me I think is a very good sign, and it's also a sentiment that the ambition for financing both equity and debt, by the way, for financing renewables is still very, very high. So a lot of appetite from capital markets to come into the renewable space. And if you think about it, the renewable space is a very attractive asset class compared to real estate or bonds or many other asset classes. So a lot of the big pockets of money are coming into renewables.
Thank you, Tomás. Very interesting view of all of you. I would like now to change a little bit subject and linking with the title of this conference, which is Solar and Hydrogen. I would like to know. I would like to hear from what is, in your opinion, the role of hydrogen. Is there any experience in the financing of hydrogen projects, or analyzing some financing for projects in Spain or in Europe. What is your view on this? And I will start with Eugenio.
Yeah, well, from our point of view, I mean, we are more traditionally solar developer, but obviously we are aware of the changes in the trends on the market, and we are looking actively to increase our exposure for alternative technologies such as hydrogen. But to be fairly honest, as of today, at least from our side, we have not seen an active market in that part of the sector. So meaning that is it true that the business, the sector, the industry is identifying there is an additional value on that kind of projects, but there's a lot of uncertainty about how to assign that value and how to monetize that value, and this implies not only financing, but also the potential M&A transactions that could occur at that respect. This is, I can say that this is something that is raising in the conversations that we have as of today, but there's still not a clear point of view or clear guidance on how to do it.
Okay, thank you. Eduardo, any experience or any direct experience or indirect from your colleagues in Holland, maybe in hydrogen?
Yes, so we indeed have been contacted by several clients asking for our views towards hydrogen. We have deeply analyzed the projects, and as of now, we are committed to one project in Northern Europe that uses green hydrogen for the manufacturing of the last of the ultimate material that the entire facility produces. The key enables for this project to be financed on a project finance basis, non-recourse, was that first the load factors of hydrogen of the electrolyzer were very high, thanks to the fact that the electricity use came from the grid directly, and that grid, due to the electricity mix of that country, was 95% green. So that makes the product green, and also because the end product was in was one of the cheapest steel that of the cheapest steel that can be produced here in Europe. So we have seen this example. Other projects in Europe, we have analyzed also another project that uses green hydrogen to source a ferry line in the Nordics. This ferry line was running based on a PPP that obliged that concessionaire to use green hydrogen. So the hydrogen price was already included in the grants. That was an interesting one, although at the end our bidder lost it. And in other parts of the world, we have seen quite an advanced project in Saudi Arabia, but the economics didn't work there. And in the States now, the appetite is increasing with now the Inflation Reduction Act, I think is the name, that provides a lot of subsidies to hydrogen facilities to be built, provides tax credits that enables us, the banks, to rely on in order to leverage the cash flows produced by the hydrogen facilities. So, in long story short, we see a lot of appetite from the projects, and with the correct regulatory support, these projects, I'm sure, will be unlocked in the next 2 years.
Thank you. Ruiz, what is your experience and the
No, I mean,
and the strategy of the bank towards hydrogen?
we have been talking to a lot of the players that are interested in hydrogen, but I think that at least in Spain, the market is not mature enough or not yet in order for a basic point. I mean, in order to structure a project finance, I need a long-term hydrogen PPA, purchase agreement. And until they don't figure that out, it's quite difficult to structure a project finance. Another issue is that you go to corporate lending and you go to one of the big names and you tell them, look, I finance your PVs, I finance your electrolyzers, and then on a corporate level. But and that's the main problem.
Okay, understand. Alvaro, what is your view on financing hydrogen projects?
Yeah, well, on the, let's say, alternative guys side, here it's not such alternative because you need to be alternative to something. And as we heard, there is no bank financing so far, at least for Spain. So what we are seeing, we are more involved looking to green hydrogen. We're more involved, to be honest, in equity-related transactions, namely joint ventures between a developer or an industrial plus an international fund. And I guess that that gap is being covered by some of these large institutional funds, which understand that that is not arriving in the short term in Spain for green hydrogen projects. And so they need to invest, do a double invest from their equity money and their debt pocket. So this is where we see, as of today, going transactions forward. Well, I understand that as long as the technology risk gets lower and, well, banks start to close their first deals here in Spain also, we will see other, let's say, alternative guys moving from solar, wind to hydrogen as well.
Okay, thank you. Tomás, what is your view on hydrogen?
Yeah, so, yeah, similar view. I concur with my colleagues here. We have not seen any financing for hydrogen projects in Spain yet. There has been some hydrogen projects, I think, built on an R&D basis, and if financed probably on a corporate level, as Ruiz was saying. But if you think about it, when you go, let me just establish a parallelism between financing a solar PV versus a hydrogen. If you try to finance solar PV and you go to the bank looks at the development and the permits, tick, no problem. Construction, EPC contract, tick, no problem. O&M, operation, tick, no problem. With a PPA, revenue sources into the future, tick, no problem. If you do the same thing for hydrogen, permitting, okay, fine. Electrolyzers, okay, fairly immature technology, but okay, fine. O&M, same thing. But then when they go to the future revenues, that's when all the red lights go off. Because as Ruiz was saying, there is no bankable HPAs, hydrogen purchase agreement. And that's also why the European Commission, and I think it was mentioned earlier today, 2 weeks ago announced the creation of this hydrogen bank and funded that with 3 billion euros, exactly to make bankable those HPAs and therefore enable the industry, enable the financing of hydrogen. So hydrogen finance is definitely coming sooner or later.
Thank you, Tomás. We have 7 more minutes to go, and I would like to leave some time for the audience to make questions. So I would like to ask you one last question and be as brief as possible, which is related to one of the trends that I'm seeing in the solar development business, which is a twofold trend. Is one, in one side, what I see is that there is a more small projects or smaller projects than there were before. And the other thing is the explosion we are experiencing on the distributed generation or self-consumption sector. And then in terms of financing, what is your view? What is the barriers and what is the appetite you see to finance small utility scale projects and self-consumption? You want to start, Tomás?
Yeah. So yeah, very briefly. Indeed, we also see new financing providers specialized in self-consumption, and let's not forget, self-consumption can also be millions of euros. We're now actually working with a client that is financing large solar rooftop for self-consumption, and we're talking again millions of euros of financing. Triodos has a special financing product for rooftops and self-consumption, so there is more of this financing coming along as well.
Thank you. Alvaro.
Yeah, well, we might not be as focused as in these smaller financing projects, but it's true that if you look at it as an industry, there are already pockets willing to invest in those. Not have the focus on who is investing at which levels, but yeah, that's my answer.
Okay, thank you. Urrutia, I know maybe this is a little bit of, because I understand the bank has a specific area for this type of projects, or what is the view of the bank?
No, and I think that self-construction is so important, and it's going to become so important that all the banks and financing are going to try to find the ways. We are creating a new department, and I think the biggest problem of financing is those not so small projects, because the very small projects, it's very easy, it's consumer finance, but they're not so small, but I think Triodos and some others are finding a way, and we also are finding a way.
Okay, thank you. And what is the strategy of ING in this sector?
Well, as they have said, our department is not really focused in this type of projects as of now. We have received several. We have been in contact with by several clients asking for our appetite. As of now, ING here in Spain doesn't provide any type of products other than the consumer finance that Ruiz already mentioned. But I think we should find a structure that to make those projects bankable, but not now.
Okay, thank you. Now the voice of the industry. Is Lightsource VP looking into smaller projects, and is it looking into self-consumption business?
Well, for the moment, we have not analyzed, at least here in Spain, opportunities regarding rooftop projects or self-consumption, but obviously we are aware of the movement, and the scarcity of larger projects made us more aware of being active in the, as you mentioned, small utility scale projects. And for those, it's especially relevant also because of the recently published and hopefully recently released capacity auction processes, because there's a rating about getting the needed valuation of the project, and includes a specific area regarding to the, let's say, socio-demographic impact, including how the citizenships around the projects participate actively on the benefits of the projects, which means at the end of the day, involving this kind of community funding, crowdfunding schemes. There are many active players, as Tomás mentioned, and this is something we obviously need to consider. Although in some occasions we may feel a little bit reluctant due to the fact that at the end of the day you are giving some kind of equity to those new stakeholders, those local stakeholders, and for larger corporations this could be difficult to solve.
Okay, well, thank you very much. We have 1 more minute. I will like to use it for the audience. I think we have time for one question from the audience, if we have any. Is there any questions? Okay, we don't have more questions. I don't know if we can use this extra minute to talk of something that Eugenio just raised now, which is the new instruments like crowdfunding and social participation in financing projects. Since you have already mentioned it, I would like to hear if the rest of the table wants to add something on this issue. Tomás.
Yes, so again, kind of the same message, because new sources of financing, in this case crowdfunding, so funding is probably one of the first platforms that started doing this, and they are being quite successful, and a lot of people is coming behind and kind of similar, following a similar business model. So once again, for certain sponsors, for certain projects, for certain situations, maybe the crowdfunding funding could be the best solution, and there are available solutions like this.
Okay, Alvaro?
Yeah, very shortly, I would say that that crowdfunding could be including, or it's already included, and it will increasingly include private banking investors, asset managers, mainly, family offices. So yeah, I believe that, well, it wasn't like a very kind response from anyone interested in knowing if there is any debt financing for their self-consumption projects. I guess that we will need to wait to these other instruments that, well, are a hybrid instrument between equity and debt, but it's the way to fund them as of today.
Okay, how is for the bank sector? Is crowdfunding and social participation a challenge?
In our case, I mean, some of this crowdfunding, they also acquire debt for the projects. So it may be another client for us.
No, that's a good point, because crowdfunding can be equity or debt.
Yeah, of course. Judith, one sec. Okay, go ahead, Judith.
Self-consumption financing. How is the bank considering the self-consumption? Is that because you were talking about rooftop, and so if the bank is financing only the one who is building or technically designing the self-consumption, is not the case for a self-consumption project in Spain, that we understand that we have the land use. Okay, so this is for me a real difference. So could you please explain which are the risk analysis to consider a self-consumption project?
Okay, since we are running out of time, I will address this question to the two representatives of the banking sector, and I will start with ING, for example.
Thank you. Well, risk analysis for self-consumption projects. Honestly, I haven't been in that scenario yet. I would say, I mean, depending on who's the client, who is the self-consumer, it's something quite important. If maybe it's a product not more wholesale banking product, but more thinking about retail products. Well, I guess that what we have to do is a deep analysis of the end consumer at the end of the time. That's what I will focus in the first stage.
Roger, you close the table.
No, I mean, there are a lot of products for self-consumption. You have renting, you have leasing, you have traditional loans, and they are all different. But at the end of the day, it's the quality and solvency of the one who wants to do the self-consumption plan. But also, I think that there are a lot of developers that are creating funds to provide self-consumptions through a PPA between them and so it would take a lot of time to explain all the different possibilities.
Okay, thank you very much. Thank you all of the panelists in this very interesting panel. And thank you, Esther, for giving us this opportunity. Now it's yours. It's all yours.
All for me. Thank you.